Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Federal Reserve says first cuts at US interest rates could come in September, as well as that Iran vows revenge as it accuses Israel of killing Hamas's political leader. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article we'll talk about is to do with the Federal Reserve and when the next interest rate cut might be. Now, the Fed has now stated that they could end up lowering interest rates for the first time this September. This would, of course, mark the first interest rate cut by the US policymakers since borrowing costs reached their 23-year high. Now, of course, this is the topic of greatest concern at the moment for markets as a whole, as of course the dollar and the Fed as a result do drive the markets, and they're related to the markets in so many different ways, and as a result it's so important to obviously cover, and a lot of the assets that we cover of course are directly impacted by any news to do with the Fed or the dollar, so that's why we of course cover it, but I'm sure you're aware of that. Now, what's the context behind the current situation for the Fed and the possibility of an interest rate cut? Well, if we go back to the start of this year, we were in a very dovish position, or at least the Fed was, of course, with Jerome Powell kind of looking quite positively at inflation, with even the market starting to price in 6 to 7 interest rate cuts throughout the entirety of 2024. So markets were expecting a very dovish monetary policy position from the Fed. And the Fed itself was expecting 0.25 percentage point rate cuts this year, which is quite significant, of course. But obviously, we have certainly not seen that. And whilst back at the start of this year, the earliest date that rate cuts could have been expected was March. That's when the kind of earliest expectations were. Ultimately, now we're now in August, and we're still yet to really hear anything or see anything regarding interest rate cuts and that sort of thing. We're really only hearing speculation at the moment, where in comparison to what we were hearing at the start of the year, which was that the Fed was expecting to cut interest rates 3 times, and the market's expecting at least 6 to 7 interest rate cuts. So ultimately, things have changed massively in the markets, of course. And whilst throughout spring and also of course going into summer, the positions for the markets regarding the Fed's perspective was of course one which was far more hawkish, with investors looking at the way that Jerome Powell was kind of talking about inflation, talking about growth, and many saw that an interest rate cut was actually very unlikely for the year of 2024 at that point, when Powell was talking about how persistent inflation was, and the fact that the US economy was still growing in a very strong manner, with no signs of slowing down. And as a result, instead of actually talking about an interest rate cut, some individuals were of course talking about an interest rate rise, which is just a complete stark contrast to, once again, what we were talking about at the start of the year, which was numerous rate cuts, which we of course have not seen just yet. Now, this meeting though was one that was highly anticipated, for the reason that we were kind of expecting this pivot in the monetary policy position of the Fed. We're expecting Jerome Powell to kind of ditch that hawkish position that he's been holding on to for the past 4 months or so now, and start to kind of ease back into that more dovish position that we were hearing or seeing more back at the start of this year. And ultimately, what we can kind of conclude is that policy pivot has somewhat already now taken place, with this meeting allowing Jerome Powell to come out and state that basically inflation is not the only issue facing the US economy now. And in fact, growth and unemployment is another one, another metric that we definitely need to keep our eyes on and manage, in the same way that the Fed has been, really intensely managing inflation over the past 2 years or so. And, this was something that we really did expect. I think at the start of this week, we published a video, I can't remember whether it was the weekly market briefing or a morning market briefing, where of course we spoke about the topic of the Federal Reserve and this specific interest rate decision and FOMC meeting. And ultimately in that meeting, or in that morning market briefing, we did note, of course, that this meeting was expected to be the place where Jerome Powell pivoted on his policy position and ultimately began a more kind of dovish outlook, or started to ease the Fed into this more dovish outlook on the US economy. And that is seemingly what is now going to be the future for the Fed, as it does seem like interest rates will now most likely come down this September, or at least could come down this September. So not for sure, of course, but there is now a serious chance, which is, a very large difference to what we were hearing back in May or even June. So, very important article, of course. I'm sure you're all aware of that. With Jerome Powell telling the media during a press conference yesterday that the first rate cut could be on the table as soon as the next meeting, which is set to take place in September. The FOMC did note that more progress had been made by the Fed to sufficiently lower inflation down to its 2% target level. Despite that fact, though, officials did also note, no, pardon me, I misspelt something there. Did also note that they would collectively need more confidence in inflation coming down before any rate cuts could be made, and that's actually been the rhetoric that we've heard from the Fed throughout the past, since last September even. That is kind of what we've heard throughout, because we're sitting at this kind of position that we haven't sat at for the last 23 years, or at least the Fed's sitting in that position. Ultimately, they want to be sure that inflation's actually coming down before they make that historic cut. As when they do make that first cut, the markets are really going to kind of start to price that, and it seems like we've already started to see that somewhat play out. And ultimately, the reaction is going to be quite significant, as the decision is a significant decision. So, that's kind of why they are kind of so hesitant, it seems like. These latest comments, however, do ultimately mark the most clear sign yet that the Fed is currently undergoing a monetary policy pivot following years of fighting inflation. Key individuals in the space have concluded that unless something drastic happens between now and September, rates will be cut in the next meeting by 0.25 percentage points. The FOMC did change its policy position regarding the greatest risks to the US economy as we forecasted, with the FOMC now saying that rising unemployment rate was also a serious concern. Powell did note that the Fed could no longer need further weakening in the labour market. So no longer do they want to see any weakening within the labour market. No longer do they want to see an increase in unemployment and that kind of thing to show that growth is slowing. So a very interesting article there, and of course we'll stay on topic. We'll stay on top of this topic, but make sure you're staying up to date, as well as we are receiving some very important economic data this week as well. Of course, including the NFP figure that we are receiving tomorrow. So make sure you're staying awake to listen out for that. But that's all to talk about in this article. Next article to talk about is more to do with world tensions, which of course has been a very hot topic as well recently, as of course tensions have sparked or the tensions have risen within the Middle East as conflicts are kind of starting to rise. So of course we've been covering this conflict, or at least this topic, since the October the 7th attack. Since then, of course, we've seen kind of hostilities escalate, especially on the Israeli-Lebanon border. But ultimately, whilst we have seen things calm down somewhat in Gaza, fighting still is taking place. And as a result, a great deal of tension can still be found there. And a great deal of worries are still there also regarding a regional war. As, the Iranian proxy network in the Middle East is very, very real and has been attacking the Israeli state over the past few months now, especially the Houthis, of course, in Yemen, who have also been attacking, just kind of merchant vessels within the Red Sea and Gulf of Aden, and also of course on the Israeli-Lebanon border, where Hezbollah, who controls south of Lebanon, is constantly kind of engaging in skirmishes with the IDF on the border where they patrol. So that's the current situation, it does seem like, and ultimately this now situation where Israel is seemingly killed Hamas's political leader. Many are now also starting to worry whether this could further push the region into a regional war. Now, Iran has now accused Israel of killing Hamas's political leader following an aerial strike into the Iranian capital city, Tehran. This comes as the Shia state has vowed to avenge the death of the political leader. Now, of course, Hamas is a part of that proxy network, created by Iran. That's kind of supported through, of course, the Islamic Revolutionary Guards Corps, and that is the kind of basically the paramilitary force which Iran operates, and ultimately their kind of sects of that, their kind of sub forces of that exist within multiple nations around the Middle East. Those being, of course, in Lebanon, as I already said, with Hezbollah. That force also, of course, exists in Syria, where the kind of Iranian ally Bashir al-Assad also kind of controls the power, and then ultimately in Iraq as well, with the PMF and other smaller Shia militia forces which are supported by Iran, and then, as I said earlier, in Yemen with the Houthis, which currently kind of control most of the power in Yemen and have really been attacking Israel throughout the entirety of this kind of period of conflict. Now, obviously, we've always been warning or worried about this kind of topic of a regional war, as these skirmishes, as I've said, have been taking place ever since the October the 7th attack. And whilst we have seen actually missile barrages between Iran and Israel already, this strike recently by Israel, or seemingly, a apparent strike by Israel into Iran, killing Hamas's political leader, the worry's very real now that this could definitely boil over into something far, far larger, as really we haven't seen yet kind of a strike of this magnitude. And while certain things could, some people could have argued that certain strikes and certain skirmishes here and there could have caused a regional war, which many have been worrying of. This is really the key thing, if any, that could cause it, as ultimately, Hamas's political leader was the man basically brokering the deals, or at least the other person in the negotiation deal, on the other side of that negotiation deal between Israel and the Palestinians representing Gaza. And ultimately, the kind of leader of that was Hamas's political leader. And so, striking, taking out Hamas's political leader does bring into question, how a peace process could be pursued now. And ultimately, the fact that this strike took place in Iran also brings into question how Iran could get involved in this, as we've already seen. So that's why this is, of course, such an important topic. And as we'll come to in the charts in just a moment, ultimately this attack already has had massive impacts on the markets, and should things continue to escalate, we could see even larger ramifications in the markets, with this strike also coming just hours after Israel confirmed their strike on a senior Hezbollah commander in Beirut, Lebanon. Ultimately, the fact that these strikes have all seemingly come at once means that many are now worrying that this could all boil over into a wider regional war. At the moment, Israel has not claimed responsibility for the death of Hamas's leader. Israel seems to be the only state likely to have carried out this attack. However, when we consider that Israeli officials have previously stated that they will hold Hamas's leaders to account for the October the 7th attacks, Netanyahu, in his speech following the attacks, said that Israel is facing some challenging days ahead, but ultimately is ready for every scenario and united against any threats. This attack also brought into question whether any peace agreement is possible, and that's kind of what I was stating there in the introduction. So we'll definitely stay on top of this. Topic. But as I said, because news is coming out just by the minute regarding this topic, especially, you're going to have to stay up to date by yourself as well. So definitely keep your eyes on all social media platforms, as that's really where news comes out first. Even if it might be incorrect, it's important to see what the markets might be seeing, and of course follow mainstream media outlets like the Financial Times and Bloomberg and that sort of thing, to also stay up to date when kind of things are confirmed and reports have been kind of processed and published. So definitely keep your eyes on this topic. Lots to kind of think about there. Next thing to talk about, though, as we have covered now everything on the articles, is of course the charts, where some interesting things are of course playing out, as we are now seeing the US 30, the Dow Jones, rise to the upside. Now, of course, ending off last week, price had sold off to the downside, and had ultimately pushed all the way back down to levels not seen since the 12th of July, as this retracement had taken place as a result of the kind of IT outage that we experienced across the world, but especially in the US, especially relating to any industries utilizing Microsoft software. And so ultimately we saw that IT outage, a massive sell-off took place within all US indice markets, and it seemingly now like the markets are starting to recover from that massive sell-off, as prices now seem seemingly reacted to that 6180 Fibonacci retracement level, which we did note that price was sitting on to start off the week. So price has now risen away from that level and is now on the upswing. We are very much now nearing those all-time high levels once again for the US 30, which were made on the 18th of July, just before the IT outage. So, we're definitely now nearing those levels. But then again, the kind of topic of Iran and the potential of war, could that impact US indices? We'll have to wait and see. But the dovish rhetoric that we've of course heard from the Fed is only going to push the Dow Jones higher, it does seem like. Lots to think about there though. Keep your eyes on the Dow Jones. Next to talk about is the dollar, if I can actually go onto it, which, whilst we expected to return back within this range and maybe stay in it for a bit longer, ultimately prices seemingly breaking to the downside, breaking below this key liquidity level of the 104.174 level, which was kind of the very bottom. But ultimately this was a very key support level, which price had utilized to bounce to the upside, and then it bounced off those high levels back again down to those lower levels. So ultimately that kind of range was very important for price to kind of accumulate, or orders to accumulate, and even orders to be distributed. And seemingly, when price broke above it for just a second and then returned back within it, we were expecting price to then stay within that that range for quite some time. But price has in fact broken now to the downside, broken through that liquidity zone. But it's a question of whether it will stay below that level or bounce off maybe these lower levels of liquidity, or in fact will price return back within this range and stay there for quite some more time. Next to talk about though is Euro USD, which is currently within this range that we did note out in yesterday's morning market briefing. So in yesterday's morning market briefing, of course, we noted the fact that price had now seemingly stalled within this range, and we asked the question of whether price would now start bouncing off those higher levels of liquidity, as well as it had now reacted to those lower levels of liquidity, and that is seemingly what is playing out right now as price really just moves to the side. So that talk from the Fed, the press conference, and the interest rate decision has really not had that much of an effect on Euro USD. Why this might be? Well, ultimately, the Fed actually pursued the same things that we were expecting. As I noted earlier, this meeting was especially, by economists and traders around the world, many expected the Fed, Jerome Powell, to shift his policy position to one which was far more dovish, and that is what we saw. As a result, it seems like the markets had already priced in that, and as a result, we're not seeing a massive amount of movement, which could explain why we're seeing this sideways price action despite such important and volatile data. Ultimately, though, the question of the NFP figure is seemingly going to be far more significant, as that's something which is far harder to forecast, and kind of whatever comes out of that will have a massive impact on the way that Jerome Powell can pursue his monetary policy position. And as a result, it's very important to understand so we know what's going to happen in the markets. Next to talk about though is pound yen, which has dropped even further to the downside. So price has now reacted to that liquidity zone, that resistance level that we noted out that price was reacting to and bouncing off. So price has now sold off in quite a significant fashion from that liquidity zone, and price is now even broken below the minus 27.2% Fibonacci extension level. So, whilst price is currently breaking below it, we could definitely expect another move back to the upside after price reacting to these lower levels. That's all to talk about on pound yen. Definitely keep your eyes on it though, as we are receiving the Bank of England's interest rate decision and Governor Bailey's speech, and that will of course have a massive impact on pound yen. So definitely listen out for both of that. Next to talk about though is Bitcoin, which ultimately, whilst we're expecting possibly a swing to the upside after price was sitting on that 6180, ultimately prices continue to break to the downside and is now broken below that 7860 Fibonacci retracement level. Ultimately, what price is now representing is far more of a bearish flag than bullish flag, with a kind of loss in momentum following a large rally to the upside. So it's quite likely now, or it's definitely a possibility that price is preparing to swing to the downside, and we're just waiting to see whether a lower high will be formed so that price can start to reverse back again down to the downside. So definitely keep your eyes on Bitcoin. Very interesting price action. Next to talk about though is gold, which has swung to the upside following the kind of dovish news that we've heard from the Fed today, and that's can of course be explained by the fact that the gold is a hedge against the dollar, and so when we're hearing news which devalues the dollar, it's like the gold's going to swing to the upside as people hedge their money against the dollar by buying gold. And that's really what has happened now, with price swinging massively to the upside over the course of yesterday and really now pushing towards those all-time high levels once again, and the price is currently, as I speak, at the kind of 2,450 level. So definitely keep your eyes on gold. Lastly to talk about though is oil, which has surged to the upside as a result of the kind of rising world tensions, especially relating to the potential regional conflict within regional war within the Middle East. And of course, we've explained previously why that's going to affect markets, but ultimately it's because such a large amount of oil supply comes from the Middle East, and as a result, kind of a war could force companies to not extract oil or not be able to kind of export oil, and as a result drive oil's price higher, which is why we're possibly now seeing speculation push price to the upside. That's all about on oil though. Lastly to talk about is the economic calendar. We're receiving lots of very important economic data today, so I'll try and get through it as fast as possible. Firstly, we're receiving the Eurozone's German, French, Italian and Spanish manufacturing figures, as well as the British nationwide house prices figure, followed by that receiving the Aussie balance of trade figure, as well as the ECB's economic bulletin, followed by that receiving the Italian unemployment rate figure, and then following that receiving arguably the most important figure of the day, which is the Bank of England's interest rate decision and Governor Bailey's speech, as well as that receiving the British manufacturing figure and Eurozone's unemployment rate figure, and then following up on that across the Atlantic, we're receiving the US jobs data and US and Canadian manufacturing figure. So lots of figures to listen out for, but we've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.